Now, gold plays into this because gold has normally been, for many, many years, a hedge against inflation. And there's arguments for and against that. Gold lost some of its favor a while back, but now gold is really on the precipice because of what's happening here. And we bring you my good friend David Garofalo. He is the chairman and CEO of a company called Gold Royalty Company. Their stocks, I was looking at their stock symbol, GROY. David, thanks for coming back because you come at a perfect time here. And I want to talk about this inflation thing that we've been discussing because part of this inflationary issue is really attached at the hip to you guys in the gold business, correct?
Absolutely. And inflation has been rearing its head for 50 years. It's really a function of debasement of paper currency. You hit the nail on the head. The temptation to continue to print money, to increase money supply is just too great for central banks. The only limit they have is what the printing press can spit out. Whereas gold is the one currency you can't print. It's very finite in quantity. And if you look at gold over a 50-year period from when the U.S. government abandoned the gold standard, gold's gone up from $35 to $2,400 an ounce, whereas the purchasing power of the U.S. dollar has declined 96% over the same period of time.
The one of those big things that Mary brought up was this issue of debt and consumer debt and spending money. Prices are so crazy, and of course, the Fed is trying to stave off, our continued consumption, at least at this rate. That's where that favors gold in a big way. And can you explain why?
Yeah, we're in a debt-fueled world right now. Global debt to GDP is 350% versus 100% back in the 70s when we were last through a major inflation cycle.
Okay, hold on. Stay right there. That means, do you know what debt service means, guys? Debt service is what you're paying for your interest rates.
Yep.
Our debt service is what, David? $1 trillion?
In the U.S., it's $1 trillion a year.
A year in debt service. Just what we're paying, that's the VIG. That's the vigorous.
Wow.
That's what you're paying in the Shylock. The vigorous, you're paying $1 trillion a year in debt service. David, continue. Sorry to interrupt.
Yeah, no, and that's doubled in the last 18 months. As the Federal Reserve started to ratchet up nominal interest rates, we saw debt service balloon, and it's going to balloon well into the future because as Treasury yields start to reset, because a lot of Treasury bills were locked in at much lower rates when rates were much lower, and as they reset, we're going to see another doubling in debt service over the next 18 months. That means 2 out of every $7 of tax revenue generated by the U.S. government is going to go to debt service. That eclipses all the social program spending they do in the United States.
What's interesting about that is you guys as a gold royalty company, and we'll talk about that coming up here because I wanted to finish on the economic talk. You guys, this is very bullish for a company like yours. I mean, inflation is understated right now. Real estate, in my opinion, rates deeply in the negative territory with respect to what you're getting out of this stuff. So you can't really turn anywhere except for equities markets, and of course you've got to have a diversified portfolio. I personally hold gold in the form of stocks. I don't hold physical gold, although a lot of people love to hold physical gold. The problem with that I have with physical gold is if physical gold, pardon me, is X per ounce. If you want to buy physical gold, it's probably a 10% or 15% premium on that to hold the physical. It's just so little gold. People, you pay extra for it. I'd rather buy an exchange-traded fund, a stock like GROY, Ely Gold Royalties, which we had a long time ago.
Yep.
Long story short, talk to us why this is important for our portfolios, and also let's talk about GROY because let's face it, you're based upon your Q1 results. I would argue that 15, 17, 10, whatever it was, 110% increase speaks volumes to what we're talking about right now.
Yeah, what you're talking about is leverage to the gold price. As the gold price goes up, that gets reflected disproportionately into our bottom line. And that's true for many operators that have stable costs. Their profitability expands exponentially relative to where the gold price goes up. Their margins expand. And that's a leverage proposition that gold equities can provide. In addition, because our operating partners are conducting exploration on their underlying properties, they're growing the ounces in the ground, we get exposure to that exploration upside. The great thing about the royalty model, of course, is we don't pay anything for that upside. Once we own a royalty, We own it in perpetuity. We have no capital calls. We have no cost inflation. We have a very low cost structure. So we have optimum leverage to both the gold price and to exploration conducted by our operating partners.
David, I'm hogging my co-host's questions for you here, but it's all part and parcel of what we started talking about. You guys went public, what, 3 years ago?
That's right.
Your IPO.
Yeah.
So this would mean this would be the first time that you're cash flow positive in 3 years, and this is such a this inflection point for you.
It is. We're in the free cash flow and positive earnings territory for the first time in our history. And that's remarkable for any startup company in any industry. But we started with a concept, basically something on the back of a napkin 3 years ago. We took it public, and we've expanded from 18 royalties in our IPO to over 240 royalties today, with 6 of them producing, 14 in construction, which underlies a 60% compounded annual growth in our revenue right through the end of the decade.
David Garofalo for president.
Wow.
Come on.
I'm voting for him.
I'm serious. I'd vote for him too. David, thank you, pal. Chairman and CEO, Gold Royalty Corporation, stock symbol GROY, leading growth in America through gold. I don't know if you don't have gold.